Hello traders, you are welcome back to the Forex Geek channel and you are welcome to this video. Okay, so in this video we are going to be diving deep into a crucial part of Forex trading. Specifically, we are going to be talking about economic indicators. All right, so if you have ever wondered how traders analyze markets beyond just charts and patterns, then you are in the right place. Okay, so economic indicators give us essential insights into a country's economy, and understanding these indicators can set you up to make more informed and strategic trading decisions. All right, so before we get started, if you are new here, don't forget to hit that like button and subscribe to the channel. We are all about giving you the tools you need to succeed in Forex trading. So let us get into it. Now, I am on the Forex Factory website. This is a popular website used for getting Forex news, okay? Getting updates on news that can significantly impact the market. All right, so I already filtered the news to show only the ones with high impact. Okay, these red folder news are the ones with high impact. Okay, so usually these red folder news affect price changes of the respective currencies. So any currency you see here, when the news is released, it usually affects the currency or the currency pairs that include that currency. That affects the price movement, at least to an extent that can impact the traders positions. All right, so that is the reason why it's important to pay attention to such economic indicators. All right, now economic indicators basically are reports or data points released by governments. Okay, as we can see here, released by governments, central banks, and other official bodies. So they give us a snapshot of how well an economy is doing. Okay, for example, we have news like, you see, like the cash rates, monetary policies, statements, ISM services. We have, okay, this one, presidential election, because as at the time of recording this video, the US presidential election just took place recently. So this is also a major news event. And we have, some other frequently occurring news like unemployment rates, monetary policies, bank rates, federal funds rates, FOMC, and the rest of them. Okay, so these are economic events that affect, the currency, the health of the currency, the respective currency. Okay, and these clues can directly impact the currency's value in the forex market. Now, every country's economy functions differently. Okay, so which is why forex traders pay close attention to the specific indicators from countries whose currencies they trade. All right, so let us break down some of the most important economic indicators that can influence forex markets. Okay, now, first of all, economic indicators fall into three main categories. All right, we have the leading, the lagging, and the coincident indicators. Now, as for the leading indicators, it helps to predict future economic activity. All right, they are the early signals that can hint at economic trends. Examples include housing starts and new business orders. Okay, so let's see if we can find um any housing. Let's see. I think we had a housing news event not too long ago. But let me just go into the future and see. Let's see if we can find housing. Let's see. Housing. Some of this news, the frequency of the news occurring might not always be the same. Okay, some news events occur more frequently than others. So, okay, let me see. Um, Well, it's taking some time to find the okay. You can see pending home sales. You see, this one is a housing related news. Okay, is a housing related news. So leading indicators such as the housing and new business orders, those ones they can hint at economic trends. All right, they predict future economic activity. Then we have lagging indicators which are historical. They confirm trends after they've happened. For instance, we have the unemployment rate. It's often considered a lagging indicator. We have unemployment rate. Unemployment rate it occurs quite frequently. We can see we have unemployment rate here. We have unemployment rate here again. Though this is for NZD, this is for the USD. So unemployment rate is considered a lagging indicator. Then we have the coincident indicators, which move along with the economy, providing a real-time snapshot. Things like GDP fall into this category because they reflect the current economic state. Okay, so the GDP, such as this one, it falls into the coincident indicators. All right. So by knowing which indicators fall into each category, you will have a clearer idea of when and how to use them in your analysis. Now let us get into more detail about a few essential indicators. All right. So here are some of the most influential economic indicators in forex trading. First, we have gross domestic product, right, which is the GDP. So let's start with the GDP. It's one of the most comprehensive the GDP is one of the most comprehensive indicators of a country's economic health. All right, the GDP measures the total economic output of a country, which includes everything from consumer spending to government expenditures. When a country's GDP is strong, it often leads to a stronger currency. Okay, so now traders look at quarterly GDP reports and also keep an eye on any predictions or revisions that could influence forex markets. Okay, now secondly, we have the inflation rate. All right, inflation rate, it indicates the rate at which prices for goods and services are rising in an economy. All right, so we can see now moderate inflation is often a sign of a growing economy. All right, you can see change in the price of goods and services purchased by consumers. Example is the CPI. All right, so a moderate inflation is often a sign of a growing economy, but too much inflation can reduce purchasing power. Right. In response, central banks might raise interest rates to control inflation. Higher interest rates usually attract more foreign investment, which can increase demand for a currency. Okay, then the next is unemployment rate. Okay, unemployment rate is the next. All right, such as this. So another key indicator is unemployment rate. High unemployment can signal an economic slowdown, which can lower the value of a country's currency as demand weakens. So traders pay close attention to changes in unemployment rate, especially around times when major economies like the US release their job reports. Okay. Now, fourth, we have the interest rates. Okay, the interest rates are set by central banks. All right, they are set by central banks like the Federal Reserve in the US, or the European Central Bank. Are possibly the most powerful indicator for forex traders. All right. So changes in interest rates directly influence currency values. Higher rates generally attract investors seeking returns, boosting the currency. Central banks often adjust rates based on inflation, GDP, and unemployment. So it all ties together. Okay. So how do you actually use these indicators in your trading? One of the best tools to track them is an economic calendar, and that is where we are right now. Because economic calendars show upcoming indicator releases along with their expected values. Okay, you can see these values here, the forecasted value, the previous value, and the actual value after the news event has taken place. All right. So here are a few practical tips on how you can use economic indicators effectively. First, keep an eye on major indicator releases each week to anticipate potential market movements. Second, don't just focus on one indicator. All right. Instead, look at the bigger picture. Combine multiple indicators to get a full sense of an economy's health. Okay. Now, finally, remember that forex markets can sometimes react strongly to indicators, but these moves may be short-lived. So always consider your overall trading strategy and risk management. Okay, thanks for watching. By understanding Forex economic indicators, you are adding a powerful tool to your trading arsenal. Knowing how to interpret GDP, inflation, unemployment, and interest rates can give you an edge in predicting market movements and timing your trades. If this video helps clarify things, give it a thumbs up and don't forget to subscribe to stay updated on all our latest Forex insights. Good luck out there and see you in the next video.